If you run a small business, it's really easy to pick a retirement plan, but it's not simple. And on this episode of Friends Talk Financial Planning, we're going to dig into the options that there are out there and how you can make the best decision for you. Hi, I'm John Shear, and I run a fee-only financial planning practice in Middleton, Wisconsin.
And I'm Bridget Sullivan-Mermel. I've got a fee-only financial planning practice in Chicago, Illinois. And before we continue talking about small business retirement plans, please hit subscribe. It helps other people find us.
All
right, John, let's dig into these simple but not easy retirement plans. The thing is that I think this is important because it helps people save a whole bunch of money.
Yeah, that's right. And when you run a business, right, you have opportunities that are available to you that you don't when you're just a regular W-2 employee, right? I mean,
Absolutely.
It's opportunities, but it's also more to think about, more responsibility, right?
Right, absolutely. And a little more complicated.
Yeah. So let's maybe just start by reviewing the three major types of retirement plans. And I'll go back to the sort of the old days are still available here today, but there's one called a Simplified Employee Pension, or a SEP.
Right.
And that's an IRA-based retirement plan. And it basically works that, like, literally every employee has an IRA. And the company puts money in. A percentage of the employee's wages go into the IRA every year, and then the employee does what they want to do with it. It's simplified, right? It's simple. Everybody's got like a super IRA contribution. Employees can't put any money into it. It's just an all-employer contract, all-employer deal, right?
Right.
So, and those were really popular. I used to recommend those all the time back in the 90s and early 2000s.
Right. And it's simple and it's easy to set up the accounts.
Right.
And CPAs recommend these all the time. And I think one reason might be is because it's easy to get on people's tax returns too. So, which doesn't seem like what kind of benefit is that? But that, actually getting it reported correctly is a bigger plus to it than you would think.
Yeah, right.
Yeah.
You forget about that. All this stuff sounds good, but when the rubber meets the road, how complicated is it on all ends of things, right?
Right, exactly. So that's the SEP.
Yeah, and then the second level, and I don't, about 20 years ago or so, these simple retirement plans came, and that's an acronym for something, but simple is sort of like a watered down version of a 401k plan, which many people are sort of familiar with how that works, right? And so effectively the rules are employees can defer money into this plan, and then the company effectively has to make a 3% contribution to the 3% match to the plan. There's some other rules, and this is not the forum to get into all the details, but you think of it generically. Hey, employees can defer what they want to. Company, we're not going to put in 20% of somebody's salary or 10%. We have to put in 3% and match what they put into it, right? And so what's changed between those two is the company contribution is much smaller generally, right? It's required. Whereas a SEP, you can decide how much you want each year, but it's a much lower contribution, and it puts more power in the employee's hands as far as how much they want to contribute, sort of like how much they want to contribute to a 401k, right? I can defer money into that plan. Right?
Yeah, it's up to the employees to contribute. So if they don't contribute, then they don't get the match, and that doesn't cost the employer much.
That's right.
So that's another reason why these appeal to some people.
Right. And it is simple, right? The low overhead, there's not very little in the way of reporting, and the contribution limit for the simple plans for the employees is you can put in up to $16,000 of your income.
Yeah, so that's not bad.
Right. Yeah, and then the maximum contribution is $21,000 between employee and employer, right? So that's not a bad deal, and it's a good solution. The problem with regular 401k plans, and we'll move on to that level next, but a regular 401k plan, it's a great place. A lot of people are familiar, but it comes with a lot of regulation. There's reporting, there's expenses that go with it.
And it's more expensive.
Yeah. And as I'm thinking about when I say small business, there's a lot of different definitions, but in my mind, Bridget, I'm thinking about some, client-based and friends that, hey, it's just me, or it's me and I got one part-time person that works for me, like that sort of small business where, geez, I'm not going to pay a couple $1,000 a year to have a 401k administered for that. It just doesn't make sense. but a simple, plan where I can put up to $16,000 away and I don't have to match a gigantic amount for my employee, but I can let him or her defer more into it, right? There's some really cool places for that.
Yeah, and I personally had a simple plan when I had my tax practice. So I've
Oh yeah,
actually
yeah.
had experience with it. It worked fine. Mine was actually through Vanguard. I don't know if they're still in the business of doing simple plans. Not all custodians are going to offer simple plans. They're not as ubiquitous as SAPs are. You're going to get fined pretty much everywhere.
Yeah, right.
So, you might have to poke around a little bit to find your simple plan. But I had it. It worked great. It was perfect for what I needed it for, which was a non-expensive retirement plan that my employee. I had one employee at the time, and they could, it was up to them whether they not they wanted to contribute, and I wanted to start saving, so I was saving. So it worked out great.
Perfect setup, right? I
Yeah,
mean, that's great. The other place that I want to bring and make sure we talk about here though too is the like a regular 401k. Again, it's a
right.
great, but it's expensive. There's other
I've got
things.
one of those now. You probably have one too.
Yeah, yeah, right. And it's just, I mean, it fits, but for some people where you go like, listen, I just want it to be, again, simpler and lower key. There's a thing that's called a solo 401k or
Right,
individual 401k. And what it does is, so to qualify for this, now you can't have employees, right? So if we take employees out of the picture, now you've got the idea that a solo 401k might make some sense. And there's no until your dollar amounts get pretty big, there's no IRS filing. There's no. It's just really low. It's really simple until it gets up to a certain amount. I think the number is $250,000. Then there's some reporting things, but even at that, it's not the complicated thing that a regular 401k is.
yeah,
But what works for that solo 401k is now I can do an employee deferral just like I can from a simple or a regular 401k, but the 401k limits are higher. I can put in over $23,000 this year as an employee.
right,
And if I'm above 50, I can do the catch up thing too, right? So maybe upwards of $30,000, and I can do the employer contribution like in a SEP where it's 25% of my wages or my income that comes in, or 20% of profits. There's some calculations that go into it, but it's like, listen, I can do an employer contribution basically the same as a SEP,
right,
and I can do an employee contribution on top of that all. So I can double dip on those things. It's not the either or sort of thing you get with a SEP or a simple,
right.
right? And it
Yeah.
does also work. It's a single person. If it's a husband and wife that are working in a business, that counts as a solo. So you can still do that if there's a couple that work in a business, right? Employees muddy the water, so it doesn't fit there.
Yeah, as soon as you get employees, the party ends
Right,
on this
right,
one. Yeah.
right. But
So
but I'll tell you,
that's
we
okay.
we
Then you switch it over to a regular 401k. So I've had this one too.
yeah, yeah, exactly.
This
That's
is
the same
really
thing.
one of my favorites because you can put in a lot. It's inexpensive, and you've got a 401k where you can invest in whatever you want.
Right,
You
right.
don't have just that's another benefit. I mean, I think a lot of people probably don't care, but most 401ks have to have specific investment options like this fund, that fund, the other fund. Whereas these
Yeah.
I-401ks, you can put it in whatever you want. So within some reason, I don't want to say everything, but so they're an awesome option. I love it. Yeah, I guess I've tried them all except for just a plain SEP.
Well, and so let me give an example. I had a buddy. He's not a client of mine at all, but we're sitting talking one day, and he says, "Oh yeah, my CPA says I need to set up a SEP here. Can you help me do that sort of thing?" I said, "Oh, well, I'll walk you through it." But I said, "Boy, that's like these days." And his wife makes a good living. I know that they live off of her income, right? So he's doing this consulting gig. He got some extra money coming in, and I said, boy, it's interesting because a SEP these days, 25 years ago, that was a great deal.
Right,
Now with the solo 401k with a simple, it's almost never the right answer. So I said,
right,
well, tell me a little bit about this. What's going on? He said, well, yeah. I said, what are your profits this year? He said, geez, I'm going to make like $80,000, and I want to shelter some taxes, right? Because we're in a high tax bracket, and geez, when we retire, we're going to be in a lower bracket, right? So I want to sock away some money. And we use a thing, and we'll put a link in the show notes, but I think it's from Solo 401k. There's a Solo 401k calculator, and it says, hey, tell us what your business looks like, what your profits are, and we'll lay out what it looks like for a Solo 401k, what it looks like for a SEP, what it looks like for a simple. And so his CPA was saying, hey, we should put away, we should do a SEP. And when he's got 80,000, he can put away 25% of that. So we can put $20,000 into a SEP. All right, that's good. Well, we ran those same numbers. We plugged things into the calculator, and based on that income, he could do in the solo 401k, he could do $20,000 as an employer contribution. He happened to be over 50, so he could also do $31,000 as an employee contribution and save taxes on that extra $30,000. So instead of his tax deduction being 20, his tax deduction was $51,000, right? And then in their tax bracket, you take an extra $30,000 of deductions. I mean, that's a $5,000 to $10,000 tax savings, like literally cash in pocket, right? And just by looking at that difference of saying, hey, if we he actually talked to the CPA and said, well, listen, my buddy says this, does it make sense? And the CPA said, well, geez, yeah, if you had enough money, you could do that. And he was
Right.
telling me, he's like, hey, I got this money account. I don't know what to do with it. Like, listen, could I invest it in someplace else? Sure. But if I put it in my 401k, I save $8,000 in taxes.
Right.
That was a really good deal. But the CPAs typically aren't wired to think about that stuff, right? They're looking at, and for various reasons, but it's really important to know that this is an option, right? And the place that comes in, if you're not looking to save money, you're spending all that money, a big deal, right? But if you're looking to save, hey, I got some extra cash, I want to save this. My buddy was a perfect example of somebody who wouldn't have been well served with a SEP. And by doing the solo 401k, it's just a slam dunk for people in that situation.
Yeah, and I think what happens is that in your early life, when you're setting your spending habits, a lot of times people aren't really saving super aggressively. They're just doing what they need to. But then as they get older, they might be in a wonderful situation where they can save more. And so it might not be a core principle of their being, but they're like, oh, wait, I can save more now. How am I going to do that? And
That's
that's
right.
especially when they super, being able to really sock a lot away in retirement plans makes a lot of sense.
Yeah, that's great. Hey, that's a great place to wrap things up here. Again, I'm John Shear, and I run a fee-only financial planning practice in Middleton, Wisconsin.
And I'm Bridget Sullivan Mermount. I've got a fee-only financial planning practice in Chicago, Illinois. John and I are both proud members of the Alliance of Comprehensive Planners. If you like what you hear from us, we're both taking clients, but if you want to find someone in your area, you can check out acplanners.org.
And don't forget, hit that subscribe button.